Resilient supply chains are often discussed in terms of how they respond to disruption. But as climate shocks, price volatility, and rising sustainability expectations put increasing pressure on global trade, true resilience also relies on the conditions that sustain production in the first place. So what does resilience in supply chains actually mean in practice? Hello, and welcome to the ISEAL Sustainability Podcast. I'm Rachel Potter from ISEAL, and I'm joined today by Sheila Senathirajah, ISEAL's Head of Social Impact. In this episode, we'll look at how companies are rethinking supply security, why so much risk sits at the first mile, and the role sustainability systems play in making that risk visible and something that businesses can act on. Welcome, Sheila.
Thanks, Rachel.
So, resilience is often framed around responding to shocks. In today's operating environment of climate, price, and regulatory pressures, how are companies currently thinking about resilience in their supply chains?
I think this is a very critical question that's coming up more and more in our conversations. We see a lot of companies sort of shifting away from just purely cost efficiency and, making trade more efficient. They're really looking at supply security. They're looking at long-term continuity, the relationships they have, managing those in order to protect that supply security. There's also a growing recognition that in addition to environmental, social challenges are also part of those kind of operational risks that they need to address. It's no longer something external that they work on at the side, but they need to address it. So we find that more and more companies are prioritizing things like visibility, traceability, better planning on, what's going to happen, addressing social risk alongside environmental risk, and ensuring the outcomes and the values get back to the suppliers, the entities that they work with, because they want to have this continuity.
In a more fragmented and uncertain global trading environment, to what extent do you think that inward-looking approaches strengthen supply chains, and where might they actually make them more vulnerable?
I suppose depending on the context that you're operating as well, there's going to be some things that entities will have to do more inwardly to change the kind of practices they have to be able to thrive in this current environment. But ultimately, if you look at the global scheme of things, fragmentation is just going to increase costs. It's going to create new bottlenecks. Real resilience comes from strengthening global systems and not being overly protective about your area. For me, collaboration is key. Global supply chains are very interdependent, and they need to work together to ensure that, we're addressing where are the weakest points. So if there is traceability issues in some areas, working collaboratively to unplug these is really important. So again, collaboration is key. We want to cut down the costs. We want to break those bottlenecks. We want to work more efficiently together. And I think this is the trend that you see more and more coalitions, more and more multi-stakeholder initiatives coming on board to support these kind of efforts.
How do you think investor expectations, due diligence legislation, and ESG-linked finance are changing the way that companies think about supply chain resilience?
So investors are a very interesting community. They support companies. They also look at supply chain risk as a financial risk for them. They're investing in these companies, so they need to also be confident that there is no financial risk for companies. Now, there is due diligence legislations that are coming down the pipelines, making human rights and environmental challenges and environmental negative outcomes a legal liability. So this is also going to be a financial risk. So resilience now is moving from a nice to have corporate social responsibility to a form of this is a risk, and we need to know how to manage this risk. There needs to be greater oversight in this space. So that's what investors are looking for. How are companies putting in place better due diligence practices? How are they actually ensuring they have greater visibility over their supply chains? How are they working with their partners and suppliers to ensure that visibility is there and that they're able to address this risk? Because these kind of risks translate into financial risk, and that's what they're looking out for.
So we've been talking about global systems, but of course, supply chains start somewhere. Why do you think so much risk originates in what we call the first mile, the farms, the plantations and forests where production begins, even though it's often the least visible but most critical point for business continuity?
Well, Rachel, you said it in that last line. It's the least visible part of the supply chain, but it determines where all supply comes from. And if farmers can't sustain production, then there's just no supply chain to protect. But the first mile is where a lot of the current issues around climate shocks, income instability, mismanagement of land or land degradation really happen at this point. And smallholders operate with just very thin margins. They have limited buffers because of the conditions that currently exist. There's also very low investment in some cases, not in all cases, but in some cases. And so it is difficult for farmers to really improve productivity, to maintain their long-term supply as well. So that's why currently, people are beginning to realize, we can't just sort of ignore that area anymore. And we really need to think about not just what producers have to do, not what smallholders have to do, but just how can the rest of the supply chain take up that responsibility to support and invest in supply chains and ensure that that risk is equally distributed and shared and taken up by the different actors, because a supply chain is for everyone. And so even the risk and the rewards need to be equitably shared across the supply chain.
So the word resilience is used a lot in sustainability circles. From the perspective of a cocoa or a coffee farmer, what does resilience actually mean in practice?
So I think if you look at a lot of the conversation around cocoa and coffee, it does circulate around income, it does circulate around livelihoods, but it's not just about stable income and livelihoods. It's also the ability to invest. Do they have enough to be able to invest, think forwardly, and put in place mitigations to manage shocks, to manage climate shocks, to manage low productivity, and do they have that buffer? So it is about, and we talk about resilience here, stable income, the ability to invest, and the confidence. They need to be empowered. There are a lot of systems currently being pushed down onto them in terms of reporting requirements, in terms of accountability requirements, but they need to have the confidence to be able to produce for the long term. So it is a mixture of different things that builds that resilience, stable income, ability to invest, and also the confidence, that empowerment to be able to operate in this climate.
If so much risk starts at the first mile and it's also the least visible part of the chain, how can companies realistically see what's happening there and manage that risk?
So I think here, sustainability systems play a very unique role. Companies are navigating a number of challenges themselves. Sustainability systems have the ability to be that interface for them in navigating compliance requirements, in navigating positive outcomes back to the entities that they work with. So they have the ability to turn this sort of, invisible first mile risk into verified data that companies can then take and act on early enough. So sustainability systems generate verified comparable data from the first mile. So they are very close to the producers and they're able to do that. They're able to identify risk through their systems. So the risk-based approaches that they take within their systems, identifying risk like deforestation or labor issues, exploitation. We've heard many times that, a lot of this resilience can only be built if we have good relationships. You hear that in so many conversations. And systems also have the ability to create this kind of structured feedback loop so that the feedback is not just one direction, again, turning into insights that companies can act on. So this allows companies to move from being reactive in a crisis when things are detected, into having a more sort of proactive sort of risk management approach. So sustainability systems are that interface and able to provide these kind of data that companies can act on quickly enough and identify, here's where the risk is, and then act on it to remediate those risks.
If the soil, the water, forests, the natural capital underpinning a supply chain are being depleted, can businesses really achieve long-term growth? And how do sustainability systems help manage that risk?
So I think it is a big issue, right? Like it's not down to one company or one supply chain. These are natural resources that are shared by all of us. And I think here there are a couple of things that systems do in practice that actually help navigate this space. On one side, working with sustainability systems is not all about collecting data and reporting, but they also are able to create within those schemes incentive mechanisms for improved land management, for putting in place better sustainability practices. So these incentives actually encourage producers and suppliers within the supply chain to act on this. So one is that the incentive mechanisms, but two is also these systems, again, they're not there for just reporting purposes, but they also think about what is the value it brings to enterprises on the ground. So what is the additional value? How can they use the data? How can they be empowered by that to make decision making? So they're slowly changing the structures that haven't been working so well. They're putting in place structures that actually empower, actually build that resilience for those producers in areas where there is these kind of natural resources. And I think the other bit is also, again, they help with the convening and the building of the relationship between supply chain actors as they go forth.
Thinking about what this looks like in practice, especially in higher risk regions and sectors, what makes credible sustainability systems and ISEAL's Code of Good Practice in particular stand out from other initiatives?
I think what's really important is if you look at the codes of good practice, if you look at our credibility principles, as you've mentioned, they're foundations for how good system governance is. It talks about transparent governance. It talks about independent assurance. It talks about continuous improvement. And these are the kind of elements that you want to see in systems so that, again, they're going beyond just compliance, but really bringing that sort of positive value back to everyone and ensuring that areas where there have been weaknesses are addressed. So they provide sort of foundations for good, credible processes and systems to be in place.
Could you share a practical example of how a sustainability system is working on the ground to address these first world challenges?
One of the things ISEAL does is we have an innovation fund where we support sustainability systems to really test and innovate strategies, approaches, frameworks, all in collaboration with partners on the ground and supply partners as well, to really put in place mechanisms or frameworks that are able to address these kind of first mile realities and these challenges. And those kind of examples range from addressing capacity building for producers or climate shocks or price volatility or engagement with producer networks or strengthening producer organizations. Yeah, so there are a number of examples that we can share via our Innovation Fund program itself.
What's the connection between smallholder economic agency and long-term supply security? And why should businesses treat this as a core part of their risk management strategy?
Farmers who have economic agency, they're more stable. There is some predictability to their production levels, to how they operate. It's a lower risk supply chain. So again, like we said just now, this sort of risk mitigation helps because companies are afraid of the financial risk. They are worried about what do shocks and vulnerabilities have on these kind of their financial risk. And so the more empowered and stronger producer organizations and producers are, this helps in the long run to reduce that sense of vulnerability on the supply side and reduce that volatility in exposure.
How do you see our upcoming symposium on resilience in supply chains in Ghana complementing other global events? And where do you hope it will push the conversation further?
There's still a lot of fragmentation in efforts that we see. And I think this is where, these kind of events that we put in place help to sort of bridge that a little bit, help to bring decision makers on the downstream side with the producers on the upstream side to look at, what are better design of programs? How do we go from fragmented pilot projects to more system level alignment and co-investment? How do we bring it together more efficiently? So it's really just pushing those conversations better, having that better collaboration between the downstream and the upstream actors. Also, because we are looking at systems, what are good systems, looking at how voluntary systems complement national standards as well in these kind of spaces is really critical, so that we can reduce duplication, we can scale impact, we can really build resilient systems moving forward.
From a participant perspective, who is this symposium most relevant for? In other words, who needs to be in the room for resilient supply chains, sustainable trade, and long-term growth?
So if we want to build resilience, we need to connect global decision makers within supply chains with first mile realities. We can't separate the two. The future of sustainable trade must be shaped with producers, not just about them or in exclusion from them. This event offers that opportunity to bring these different actors together to the table to really discuss, what are the needs, what's important to producers on the ground, how do we design this collaboratively? What are the role of the different actors? And, how does this translate into real world action? And how can downstream actors then support and invest in supply chains to enable this?
Sheila, thank you so much for joining us and for the conversation. You've been listening to the ISEAL Sustainability Podcast. To find out more about our work on credible sustainability systems and supply chain resilience, visit ISEALalliance.org. For more conversations like this, follow us wherever you get your podcasts. Thank you for listening.